Hello and welcome to another video here on Global Trader Club. My name is Marty, and as you know, we calculate the best trade days and intraday timing windows before the market moves. And so I know sometimes people are skeptical about it, but history really does repeat itself. So calculating it is not a big deal if you know what you're doing. And on our website here at globaltraderclub.com, you can get a free blueprint and pretty much read what we're doing. All right, so if you're skeptical, just read it, find out. We've been doing this for ages. We're a fintech company automating timing and pricing for markets. All right, so now we're also doing it for retail traders. Now let's go back to CycleEdge. This is what we want to really talk about. I've done 2 videos on CycleEdge before. However, if you haven't watched them, don't worry about it because I've updated it, upgraded it. Let's make this a little bit smaller so we can see everything here as well. Okay, and there we go. So with CycleEdge, what we want to do is we want to know when the markets are going to turn around or break out way before they happen. For this to happen, we need mathematical calculations, just like we've got seasons in life, the 4 parts of the day, 4 parts of the year, 4 cycles of life, everything. We have also cycles for the market, and a lot of people have actually done research on it. It does work, and I'm not going to bore you with all the details, but I'm just going to see how things are panning out with our new software. Now I'm doing Bitcoin again, so all we have to do is just carry on with Bitcoin. So I've already done the report. As you know, I can only see 2 weeks ahead, but I can go back as much as I want. So we're going to see 2 weeks ahead from this one, and I've included the intraday swing trade hours here as well. If you are in the members area, if you're a member of the Global Trader Club, then feel free to drop me a line and I will send you this as a PDF report, because I can I can give you a PDF report as well here. As you can see, download PDF report. All right, so what are we seeing? What are we seeing here? First of all, it's giving us an apex signal. It doesn't have to. You don't get an apex signal all the time. However, here we have one, and an apex signal is really handy to know, because apex signals are going to give me times or days, really, a date when the market should get to a level and it's either going to stop and turn around or break out. So that day is important, and knowing that day in advance is very important, because at the end of the day, why does timing really help us? If I know what day is highly likely a high probability good trade, if I know what day is volatile, if I know the trading hours of that day in advance, I don't have to sit in front of the screen looking at the screen for my setup. If you know technical analysis and money management, all you have to do is check your chart at the hours the system gives you. And on those days and on those hours, if it matches your setup, go for it, because you're going to have a bingo trade more often than not. It also reduces your risk. I mean, who tells you at what hour of the day, on what day to trade Bitcoin? All right, so these calculations are important, and matching it to technical analysis is really important, because then you got a cross-reference, and this is what we really do: price and time. So I want to make sure our pricing indicators and our timing indicators match. Okay, now for the benefit of this exercise, I'm only looking at timing, because my price indicator is still work in progress due to updated platforms. So let's take a look at the timing. It's giving me an apex day, Tuesday the 5th of May. This is Bitcoin, so let's open up 5th of May. So this is the 18th of April, so let's get to, that's your 5th of May. All right, so that's good. It's good to know it's a high, and the market has done a big flop all the way down here. All right, that's good to know. Let's get rid of these. We can line them up later if we need to. All right, so already knowing that that day is important is very good because it's going to reduce our risk, and we can look for a setup where we want to go to the other side and sell it off. All right, so that's the apex, and that's just one day that it gave to us. Why? Because this day is a high probability clean trade. If that day gives me a level, I do want to be on top of it, okay, because it's going to make me money, highly likely than not. I've also set here, as you can see, some color coding, right? Red, orange, yellow, and the apex. Apex we already talked about. Red days are good to trade. Red days doesn't mean we're going to fall, okay? The market is not going to drop. Red day means is a good day to trade. Orange is an average day to trade. The yellow is a riskier day to trade. But if you take a look at what's underneath, you'll see there's 54.1% hit rate. So obviously I'm not going to be trading on a time that is like really pathetic and ridiculous. We want to have some stats and data behind us. So as you can see, 54%, 69 and 84% hit rates as and when they occur. Obviously market conditions change all the time, but maths doesn't. All right, so we can make sure that we use those dates, and if we're not on those days, just don't trade. All right, so why would you want to be trading if you're going to have less than 50% success rate? So knowing these in advance is good. And then we've got here February. Now remember, the report starts from the 1st of March, right? But I always like to put the previous month's summary in front of us. Why? Simply because on the monthly summary, you will see long-term cycle vectors. These are long-term cycles, which means that on those days, if a move starts, it would last for several days at least. Okay? Now, the problem, and a major problem with cycles, is there is no one cycle. There are a bunch of cycles. This is why I said a year has 4 cycles, a month has 4 cycles, a week has cycles, a day has cycles, even an hour has cycles, even the smallest minute has cycles. So cycles, there are lots of them. All right, but if we understand mathematically where from one point to another we can take a curve and calculate that curve for a projection, according to the bigger scale, we can calculate bigger dates, and those dates should become relevant for us, okay? Especially afterwards when a large cycle's date, okay, matches a price on our technical analysis, okay? So I've also divided these up, as you can see, grade A, grade B. So EXT, or, well, you don't really need to worry about those, near or extensions, but the type is important. So these days are going to be important. And if it's, for example, a primary cycle, then I'd want to keep an eye out for it. So when is it going to start? 12th of September. When is it going to peak out? 26th or 28th of December, right? So these days I want to look into it. As you can see, like, there are a few months in between them, right? It's a big cycle, okay? And the bigger the cycle, the stronger it's going to be. So that's why I want to know about them. And that's February. Okay, so you can check out all of these. I'll move down slowly so you can just take screenshots. And remember, grade A and grade B, right? So you want to make sure you're taking good trades, and you want to make sure you're matching it to your technical analysis. Now, here we are in March, and the first thing you see is, well, Sunday the 1st of March, and it's going to give us a daily insight. All right, so it's giving us a daily insight. It has one aspect peak window, okay, but it's given me 4 here, which is grade B. So if I do want to trade on this day, I'll have a standard timing day, It's going to have about 54.1% hit rate. It's not bad if your timing is good with your pricing. Then you can, inside a day, like even if you're like day trading, you can get like 1 to 3, 1 to 4, even more really, really often, simply because if I come to the 15-minute chart, simply because once you get the time right, you see, your stop loss is just going to be below the low and you're just going to follow through. All right. So following through is, based on the hours. So having time and then price, then if you say, for example, well, I'm going up, okay, but how far am I going to go up? All you have to do is measure that with your technical analysis, match the time as well, because it's giving us the future hours as well. Now, a quick note, right? These hours that you see here, as you can see, they're for my local time, all right, because the software adapts the hours according to where I am. If I put the software into the members area, which I can't at the moment, because I need a developer, and because I'm a solopreneur, I do everything myself, so I'm not going to run after one. What I am going to do though is make sure the information is available. All right, so on the website in the members area. All right, so we've got hours here, and according to these hours, we will want to trade. All right, so that's your Sunday, March 1st, and then we've got, well, do I have a March 1st? Let's take a look at March 1st. This is the 2nd of March. This is the 1st of March. All right, so this is the 1st of March. It's a Sunday, okay, so you guys can see that, right? So let's take a look. What hours did it give us? What is that? 8:59. So 9 o'clock, 2:15. So let's do it. 9 o'clock. Where's 9 o'clock? That's 9 o'clock. And then we've got 2:15. 2:15. And then we have 6:15, 7:15. Then we have 6:15. Is that a 6:15? This is a 6:15. And then I have 7:15, which is there. All right. So what's really happened on both of those? On all of those. All right. So as you can see, we have a bit of an up move, down move, after a retracement, and ongoing down move. How are you going to make sense of this? You're only going to make sense of it if you use your technical analysis. You're also wanting to check March 1st to see if March 1st is actually going to be for you a trade day. If it's not a trade day, then why bother? March, let's take a look at March 1st. This is your March 1st. Now, let's think about it. The market is low, so I want to go up, okay? And if I had March 1st as a trading swing day, our bias would be to the upside. Why? Because the market came down. I want to go to the upside. If I'm down and I want to go up, I don't want to be selling, obviously, right? So I'm going to look for a buy opportunity. But if a buy opportunity hasn't come in my direction, then I'm not going to do that, am I? So that is how you're going to match stuff. I'm not cherry picking anything. I'm just going over the report, all right? So I don't redo videos, I don't edit videos, and I don't do all that mumbo jumbo stuff. 3rd of March, let's take a look. Oh, look, these were grade B, by the way, and that was a 7-way day. All right, so not very exciting. Okay. 3rd of March, also standard timing day, 54.1%. Remember, we have to match technical analysis. So I'm now looking at it. I'm thinking, okay, what days do I have? What hours do I have? So 9 o'clock, 2:40, and midnight 45. Let's take a look at that. 9 and 2:40 on Monday. So this is Monday, right? That's your 9 o'clock, and that's your what was it, 240? 240 it is. And this is this is 240 on that bar. All right. So here the market's going up, here the market's coming down, and then market shot to the upside into, look, once again, that trade zone was that 715. I didn't have a 715 here. We had a midnight, right? So let's take a look at that. And that is your midnight there. All right. So the market pretty much moved from there to midnight there, and that's a new bar opening. Now remember here, this is probably coming from my manual calculation in the Global Trader Club members area. That was March, right? So the 3rd of, let's see, the 3rd of March. Here is the 3rd of March. Let me go to the archive. 3rd of March. Here we are, 3rd of March is a Tuesday. All right, so you see these hours here, okay? And according to these hours and these comments, trades are done, right? But with Edge, which is an automated timing, you will also have specific hours. You're only going to trade if it matches your technical analysis. You do not jump into a trade because it's a trade hour. You can, if you're going to swing trade off a day and then put your stop loss under the low of the previous day or the previous swing. That's fine. But with timing the intraday, that's not how it works. So here we have the 4th of March, 9 a.m. Oops, 4th of March. 4th of March is, this is the 4th of March. Now on the 4th of March, that's your 4th of March, I've got 8:05, which is there, 7:45, 8:05, and market going to the upside. And then on this one, I've got 9 o'clock on the edge. So let's do 9 o'clock on the edge. And that's your 9 o'clock on the edge. Market breaking out. Okay, so that's how you're going to use your hours. If you know technical analysis, what are you going to do? You're going to say, well, we want to go up. Well, that's your 9 o'clock, and that's your breakout at 9 o'clock. All right, so knowing that obviously is importante. What else? Let's take a look at Edge. Let's just go down the report so you guys know what I'm talking about. Now, as we scroll down, what are we going to see? We are going to see the weekly insight. Always starting from Sunday, ending on a Saturday. Okay, why? Well, it's not just because it's Bitcoin, but the bigger cycles, right? They'll influence several days. So you don't really want to miss out any days, even if you're trading Monday to Friday. Even if it's a Monday to Friday market, with the big cycles, you want to see if something's happening on the weekend. All right, so I've taken it from Sunday to Saturday. That way, we get a better perspective. Now here you have a bit of a summary, what could happen in the week. So for example, it has highest weight count is 10. So I want to be looking out for that day. Tuesday, March 3. Okay, Tuesday, March 3. Let's take a look at Tuesday, March 3. That's March 1, 2, 3. All right, that's your 3rd of March. Market dips down to shoot up. Okay, remember, if we want to chuck a UE, we're just following it through. Now, on the weekly insight, there's something really, really nice. Now, remember, that's just for one day. All right, it's just March 3. Mark this date. The cycle engine gives you the when price structure gives you the which direction. Do not pre-anticipate direction. Confirm with price action. All right. So all you have to do is once you understand what direction you're going in your intraday, you just go in and trade it off. What else? Now here the important thing is swing day forecast. This is the best. It is short to medium term. This is perfect for my style of trading because it's not taking all the weeks and weeks and weeks and months of cycles into account. It's telling me what's ahead of me this week, what I need to look out for. Here you will see, for example, primary cycle vector, something that started on the 12th of February. Okay, we're in March, remember. It peaked out on the 23rd of February. And then it is now on the 4th of March ending. All right. And then I've got another one ending on the 2nd of March. So on this week, I'm going to be looking at, since we're in March, right? I'm going to say to myself, wait a minute. Let's check out the 2nd and the 4th of March to see if something is ending. Why? Because if something is ending, something must be beginning. All right. So let's take a look. 2nd and the 4th of March. That's your 3rd. That's your 2nd. So market pushing up. Look at that big day there. Boom. And then look at that 4th day. Boom. Nice. So I've got 2 days here. And they're both going to the upside until the market falls off. So that was right. It's telling me, listen, dude, something is ending up here, and that's a grade A. All right. If you are in the members area, you guys already know swing days, trade swing days. So as you can see, that's how we're getting them. So let's go back into CycleEdge. All right. So obviously, if something's grade A, obviously better. Better than grade V, but if grade B matches your technical analysis and you want to trade it with your setup, it's also good. What else? Let's take a look at, for example, I've got a grade A here. Look where these started. Now remember, these 17 February starts, they were in the month of February. We can actually go and check that out. Let's look at this. On the 17th and 18th, I've got 3 grade A starts. Let's go to 17 and 18th of February. 17 and 18th of February. This is the 17th. This is the 18th. So I've got 2 days. Market coming to the downside. Okay. And then let's make this a little bigger. All right. Oops. February. Here we are. Okay. Market coming to the downside and then 3 days up from the low. All right. So these are intraday or a few days of trading, which I like. Why? Because once you got direction, you could follow it through. Okay. And then what? And then, for example, I've got Sunday and Monday, right? 1st of March. Let's take a look at the 1st of March. Where are we? Oh, look, the 1st of March, market taking off, going into there. Remember, we also had these March days, the 2nd one and the 4th, big juicy days. All right. So by knowing what grade trades I'm taking, okay, if it's a good day or a average day, I'm also increasing my likelihood. If the market is already coming down on these 2 days, I want to look for a place where to buy. How do I know if I should be buying there? Well, that's your technical analysis setup, and I always like to draw a line. If these cycles are ending here, right, something must be beginning. And where was the last price move that shot up? Right here. As you can see, not as strong as that buying, but still enough to give us a few days of good direction with profit. All right. So by seeing these days ahead, I can plan my week. For example, what do I have? 22nd of February. Look, 22nd, 22nd, 23rd. So the 22nd and the 23rd are going to be important. And I've got 22nd, 2 grade A's. So let's take a look at 22nd. 22nd. That's your 22nd. And that's your 23rd. Boom. All right. So these are good to know, right? So you see how the market is turning, because remember, we just went long here, right? At the end of there on that day. And then it's telling me, listen, market can turn around and these are the days. So I'm not in false expectation that this is going to go to the moon, right? I'm anticipating that the market's potentially going to turn in the next 2 days. So I want to take profit. I want to see if the market is going to turn around so I can go the other way. And this is how you follow every wave in the market. It just makes sense. And if it matches your technical analysis, which it should do, great, because at the end of the day, what are you going to be doing? Well, if you want to sell this thing, you're going to say to yourself, well, where do I want to sell it? Well, you want to sell it at resistance, okay? And that's your trade hours. So you just look for a U-turn, all right? If you took timing or pricing from me, you know what a U-turn is. If you know the day in advance and the times in advance, then obviously you can do that U-turn and it's not going to be a big drama for you. Okay, so that's basically it. Okay, so these weekly levels are really like bread and butter, and we get the grades A and the B's. All right, and obviously, like seeing them advance is a good opportunity for you to know when the market's going to turn. If it's going to be a 10-way peak, then that's the day. So I want to look out for that one. And then for every day, that's what you have. So for example, what do I have here? This is the 9th of March, right? So let's take a look at the 9th of March. 9th of March. This is the 9th of March, right? Now, when I'm just looking at the 9th of March, obviously you want to check if there's something happening on the 9th of March for you. How are you going to know that? You're going to go to the weekly insight, right? So you're going to see, well, is there anything happening on the 9th of March? So I've got the 10th of March. I've got the 8th of March, right? So 8th of March, that's good, because if that was a place where a cycle peaked, then something new is likely to start. So I've got the 8th of March there. I've got another 8th of March there, which is nice to know. All right. So the 8th of March is important on these days, right? So let's take a look at the 8th of March on the daily chart. 8th of March. 8th of March. That's the 3rd, 5, 6, 7, 8th of March, right? So the 8th of March is a down, all right? And what you want to do, let's see. We were looking at the 9th of March, weren't we? And on the 9th of March, we've got really grade A entries. Okay, great. So the market is down. I'm expecting a swing, right? So I want to go the other way. So what hours should I be doing? 3:15, 5:25, 5:45, 6:51. So that's a New York zone, right? From 5:25 to 6:51. So that's a New York zone. 3:15. Let's take a look if I've got anything at 3:15. 3:15. This is 2 o'clock. There is your 3:15. So that 3:15, this is a 15-minute chart, right? 3:15 finishes off and the market starts going to the upside. Let's take a look at the New York hours in case you're not in Asia, right? But even if you're not in Asia, if you know 3:15 is a grade A trade and March 8 was an end of a cycle, meaning March 9 we're probably going to start something going the other way. So 3:15 a.m. for me might be a good time to stay up and say, I'm going to wait for this. If it matches, I'm just going to go for it. Why? Because look, it's a swing, all right? If you get in on that day after that, you're going to go places, right? So let's take a look. 5:25, 5:45, 5:25. 5:25 is there. 5:45 is there. So obviously you don't want to be buying up there. And then we had, what do we have? 6:50. So round that to 7 o'clock is there. All right, so this is pretty much where we kind of like peaked out before the market started going sideways. But the beautiful thing is you also know the hours for the 10th of March. So you can come to the 10th of March and say, where's a grade A? 10:30, 11:55. 10:30, 11:55. Let's do this. 10:30, 11:35 is there. Okay, so 11:35 is obviously we're up here. All right, so I don't know if you want to buy up, if it matches your technical analysis. All right, but if we're going to go up, where do we want to go up? Every time I want to look, if I'm going to go up, I'm going to look for a pullback during the day to go up. Okay, I don't want to be buying the highs. You'll often see me or hear me in the video saying, guys, if there's a gap, let it fill and then we'll follow through. And that's basically it. Now, sometimes it'll move on hours. Like I got 5:15 here, right? 5:15, what was that date? 10th of March. Let's take a look at the 10th of March, right? 10th of March is going to be Tuesday. See, these are the ones I did manually, right? So 7:10 where market can turn or continue. So check your price. And if it has direction, target is 9 to 10 o'clock. So 7:10. 7:10 is actually a top. See, knowing that is also important. If it has direction, you see it's going into 11 o'clock. So knowing these things in advance, 9 to 10 o'clock to closing, that's your 9 to 10 o'clock to closing is there. All right. So you see, knowing these things, when the market's going to turn, is gold. Why? Because you're not going to anticipate that it's going to go all the way to the moon. You're going to manage your trade. This is why timing the market will minimize your risk. Okay. And that is really, really important. Minimizing your risk is like really important. And also it gives you, a calm attitude. You say, well, this is a time when the market can turn around. So let me close half the position, move the stop loss forward. What do I have to lose? Knowing the time can you know, exactly change the way that you're trading. It's just going to be relaxed. Okay, so let's move a little bit more forward. Now, all of these timing periods are obviously here, but like I said, these timings, okay, are not as detailed as I do here manually, because here I really do a manual check to see what's going on, and this is on a 4-dimensional calculation, whereas this is on a 2-dimensional calculation, because I have no idea how to put that onto a 4-dimensional calculation. Right? So this is why, right? This is why sometimes we'll have less hours here compared to what I've done manually. And here I can comment as well. Here I can't. Okay, it's just that's it and that's it. All right, it's still high probability good. If you match it to your technical analysis, it's not going to disappoint you. You are going to minimize your risk and maximize your profit. And I will tell you this much, that you will increase your hit rate if you use it well with your technical analysis. This is a great edge to have. And that's basically it. So with the weekly insight, you want to know what days are good to trade. And with the daily insight, what hours are good to trade. Just do your technical analysis and you're cooking with gas. If you want to do something for the longer term, you certainly can. All right. For example, let's see on the monthly. Will it give me a monthly one? It should give me a month. Here's a monthly summary, right? So for example, here I've got Friday, 12 September. Now, you see this one in the February one as well. Why are you seeing the same cycle in the month of March, just like in February? Why? Because it's expanding all the way into April. So you will see this all the way into April. All right, this will be in the April monthly as well. And then that cycle's over. All right. Also, with the long-term cycles, I want to see, if an 18 April is coinciding with a smaller time frame. So I'll go to the week of 18th of April and check, well, wait a minute, is there anything happening on the 18th of April? All right, so, that's something we can check right now. Let's check it out. All right, so let's come to the weekly insight for the 18th of April, which is going to be the next one. And is that it? Yeah, right. So 12th to the 18th of April. So I want to check if something's happening on the 18th of April for the intra week. All right. And if I do find something, then it's going to be like, okay. You can also check 18 to 20. Why? Because the bigger cycle takes a longer period. So if I've got something on the 18, 19, 20 of April, that is going to be like important for us. And look, here we have 18. All right, so we've got secondary cycle peaking out. Is there anything else? 18 April, not particularly here. Yeah, we've got something here. We've got a primary cycle vector. So 18 April. Let's check out 18 April. Let's go to the daily and check out 18 April. 18 April. Let's see. 16, 17, 18 April. There you go. Market takes a 2-day dip. All right. So if I know that something is ending or beginning on the 18th of April, I want to be careful. So if I was long, I'd say, or maybe we just put the stops up and just call it a day. Right? As you can see, it started getting choppy, and that's it. We will have other cycles as well, like this one, the 5th of May. Remember, we took a look at it. That was an apex day. You'll also see a bunch of stuff for May here on the intra week. We can, in fact, take a look at that as well, right? Let's go to May. Because May, like, if you watch the videos for May as well, I did say Bitcoin should fall from around there. It shouldn't go over 83. Why? Because I had a pricing calculation on 83, which is not in this one, okay, because I'm working on pricing as well. But 83 was like staring at me like a sore thumb. It was like 83,000. It shouldn't go above 83. If it does, it was like going to surprise me. And it didn't. So then knowing a swing day around the price of 82, around there, was like, oh, this is a place where they're selling off. Okay, so it was like good to know. Let's come into May and we'll figure it out. So that's April. So now we're in May, right? So first, let's take a look at the first week of May and let's see if we have any trade periods for the weekly insights. So what do we have for May? Let's see. We've got 7th of May and it's a grade A and that is ending, right? So 7th of May, I want to keep in mind. Tuesday, the 5th of May, it's ending. So the 5th of May, the 7th of May, I want to keep those in mind. Is there anything starting on those days? Got a 4th of May, 6th of May. So that week, right, 7th of May, you can see 4, 5, 6, 7 things are peaking out. All right. And that's a Monday. And yeah, that's about it. Okay. So 4, 5, 5th was a major cycle. Now we're looking at 6, 7. Yeah, 6, 7, May. And I think it was 8, right? 6, 7. Well, I got 6 and 7. And that's it. They're peaking out and ending. So let's take a look at the 7th. Okay, so that is the 5th. That's the 6th. The market makes a high. That's the 7. And it's bye-bye. And that's it. Market just turning off. Retesting here. What day is that? Is that giving me a date here? 11 and the 12th of May. Let's check it out. 11 May. Do I have anything on 11 May? Let's see. 11 and the 12th. Do I have a start? Actually, that should be interesting. If something starts on the 11th or 12th of May, then let's see. These are April. Also, look, we've got starting on 8, 9, 8 May. So here we have 12th of May, primary cycle vector, and it starts. All right, it's going to peak on the 27th of May. So 12, 14, 15. So those are primary cycles, 12 and 14. 12 and 14 May. 12, 14. Okay, and where do we need to follow it to? It's going to peak out on the 27th. So I want to make sure I follow it into 21 to 27. Where's 21 to 27? This is your 21. So we follow it into there, 21. And 27. Oh, 27. Just follow it down. When is it going to end? Let's take a look at when it's going to end. This one's ending on the 31st of May. And that one is on the 8th of June. So 31st, this one is ending, and this one's ending on the 8th of June. Right there. All right, remember, if something is ending, something is beginning. Right? So knowing when the market's going to turn, continue, it's just following these around. So I hope that helps. Okay, so currently, right, in the members area, you see things like this, okay? But I will put these reports on an asset-based format, so you'll be able to see it on an asset base. And then all you're going to have to do is just keep track of the dates. Say, okay, I've got to look out for these dates. Got to look out for these dates. And on those dates, let's check out the hours as well. Or you can do your own technical analysis, set up integration with the timing, with the day, and call it a bingo day. The beautiful thing is you know how far to follow. With the longer time frames, you can't like follow it all the time into that direction, because with the bigger cycles, what happens is, because you're getting a bunch of other cycles, they're like mixing up. It's gonna be blurry. Okay, this is why I like the weekly insight. But the beautiful thing about the bigger time frame cycles is those days when it's gonna start, peak, and end. It is really good, because then you can say, you know what, here we're gonna have a big move starting, right? So those specific days within the big cycle, the start, the peak, and the end, is going to be like, okay, these could be like swing days for us. Do they match technical analysis? Yeah, okay, let's just do it. And then that way you're just going to rock and roll. All right. Okay, so that's about it. And I'll do more videos on CycleEdge because I'm really excited about it. I've got 2 other software. If you took timing, if you took the timing course from me and you want to dig deep into it, let me know. Like I said, it's not on the servers yet because I need a developer. But in any case, sooner or later it will be. And if you took the timing course, you're gonna love that, because it's just pinpoint. It's pinpoint, and I've added some more. I've added some more details which you can't find in any other software, because the timing is like completely based on how I'm doing stuff, and I've added some other aspects to it that you will not find anywhere else. So hopefully we'll get those done. All right, so I hope this CycleEdge video helped you out. I'm going to change the membership a little bit. I'm going to have a premium zone there as well. In the premium, I will be putting certain reports like this, like every 2 weeks. We'll have reports for a bunch of assets there. All right, and if there's anything specific you want analyzed, then drop me a line, say I want a custom analysis on this asset, and then I'll do that for you as well, and you can have your own report for whatever you're trading or whatever you're investing in as well. And that's basically it, guys. All right, have a good weekend.